Okay, so good afternoon, everybody, and welcome to another interesting episode of our Saturday live session. It's a session that affords us opportunity to x-ray the market, look at previous week trading opportunity that we have, see areas that were wrong, and see how best we can make appropriate correction, and also look at potential trade setup for the week ahead. All right. So as you know, we usually start from DXY. DXY, as we know, determines a lot of things in the market for the best reason that is known to each and every one of you. All right. So if you look at DXY on a monthly time frame, you will see that it's bullish. All right. It's bullish. You have a three-wave structure here. Then you should have this move at least to break this top. So we still have a long way to go in TXY rally. And that is why you see all the majors are pushing down, euro dollar pushing down, pound dollar pushing down. All the majors are pushing down. And of course, you know that right now we are in a risk of environment. What do I mean by risk of environment? Risk of environment is a situation where uh, major currencies like AUDs, like GBPs, like euros, they keep falling due to, a lot of problems in the economies, problem ranging from inflations, where economies have to start increasing interest rates, and of course, you know that interest rate increase will reduce inflation, but it's not good for investment because when you are increasing interest rates, to arrest inflation, what you are essentially doing is that you are making investment climate very difficult. You are increasing cost of borrowing, and there is no way you increase cost of borrowing that investment will thrive. Investment must go down. And once investment go down, there will be reduction in productivities. And if care is not taken, you will even begin to see unemployment rate will begin to go up because industries are not investing, in production. They are not increasing capacity because you have increased the cost of borrowing that will have afforded them the opportunity. So, but you can see that in spite of all these problems, dollar index is bullish. Why is it bullish? Because dollar itself is a safe haven asset. When there's problems everywhere in the world, you see that people still prefer to hide their money in USD. They prefer USD, CHF, and JPY. That is why right now, as we see, when we get to analysis of JPY pairs, you will see that despite the negative interest rate that JPY is attracting right now, investors still prefer to, put their investment on it. They still prefer JPY, at the expense of GBP and Euro, despite the negative interest rate on it. Because if you also see the capital account, the current account rather, of JPY, you see that is very positive, very encouraging. Even though they have negative trade balance, their current account is quite impressive. And because of all these fundamentals that we have to put together, you will see that we are expecting a strength in JPY in current session. We're expecting weakness in GBP. We're expecting weakness in Euro. We're expecting a bit of strength in a Bitcoin. We're expecting Bitcoin to, pull up at any moment. We're expecting AUD to go down. All right. We're expecting NZD to go down. These are currencies that must go down when we're in a risk-off environment. Risk-off environment is environment that is characterized by a lot of problems with economy. At times it can be as a result of pandemic, at times it can be as a result of war, at times, it can be as a result of natural occurrences like flooding, tsunami, and so on and so forth. But right now, we are just battling with, what do we call it, COVID-19. We are just coming out of it. And as if that is not enough, then Russia-Ukraine crisis started. And this crisis, honestly, is causing a lot of issues. It's causing a lot of issues right now because it has affected the supply of natural gas, supply of crude oil to other part of the world, and it's giving us a lot of problems. So this is just the background of some of, the background of global economy right now. So based on this, we'll be looking at the technical charts to see how the technical analysis, reflect, or align itself perfectly with the fundamental analysis as we have expressed. Okay, so you can see DXY is bullish on a monthly time frame. Then on a weekly time frame, you can see that it's still bullish, but at this stage, nobody will want to buy. We'll expect that there should be correction at any point in time. We should experience a correction at least of this magnitude before we push up to the upside. So we don't want to buy DXY. We're expecting a correction. Okay, that's on weekly. On daily time frame, you can see the correction is beginning to gather little by little. Okay, correction is here, beginning to gather. All right, what we expect is that if this is the first reaction of this correction, we expect that this might just make a pullback like this, a push up, and then a come down. Okay, because this one in circle here must reflect itself here before we can have a meaningful push to the upside. All right, let me do it again. You have this push down. Okay, now in this time frame, you also have this push up. Okay, let me change this to white color. White. Okay, so after that, you have this push down, 1, 2, 3, and push down. This is what I'm expecting. Let me change this one to blue. It's how to do analysis. Okay, then after that, you need this white here to push up. Can you see? You need this white to push up, and in that case, this has become your wave A. Then this A, B, and C here has become your wave B here. Then you have the yellow to come down to break this low. All right, let's change this color to yellow. Yellow. Can you see? This is how we look at the market. And then here become wave C. All right. So this is what we expect DXY to do. And if this analysis is right on DXY, it will help you to get all other pairs, correctly. Okay, this one comes this way, and then you have continuation to the upside this way. Remember, when we check this pair on a monthly time frame, it was bullish, but we're at a level where we need some sort of pullback, and this is the pullback we are expecting in ABC. All right, once it gets to this level, forget it. We're on our way to the upside. So that is DXY, guys. All right, I don't think I should go lesser than 1 hour, but want to take a screenshot of this, you can take it because I'm going to delete it now, right? So if that's the case, we have had a 3 waves up, we need a push down. Let's go and see the possibility of having this push down and what we need to see to know that this push down in DXY will take place. So what you just need to do is to wait. You have seen a push down here. You have seen a push down. You have seen a 3-wave structure here. My style. All I want to see is if I can get this kind of candlestick pattern right here. Very quick, guys. This kind of candlestick pattern. If I can get it here, or top here, if I can get it here, beautiful. If I don't get that, if I can get this one right here, guys, if I can get this one, if I can get it over here, guys, that will tell me that, wait, DXY is about coming down. And once I get it on a daily time frame, all I need to do is to go back to 1 hour. Let's just do this. Let's say we'll have this, okay, and then we'll have another one like this, okay. Have another one like this. The second one being red, okay, red like this. If we have it this way on a daily time frame, guys, all I have to do is to go back to 1 hour. For the fact that you have seen this engulfing on a daily, you are going to see a massive impulse on 1 hour. You are going to see a massive impulse. This is going to create a massive impulse on 1 hour. Remember, this system of trading is to, increase your level of emotion. Try to, I don't know how to put it, try to calm you down from getting your entry too early. By the time you are looking at daily time frame, you have merely seen engulfing. Whereas if you were not looking at daily time frame and you were just looking at 1 hour time frame, this engulfing, you will have wanted to take your trade from the top. And in most cases, when the candlestick that you feel is engulfing candlestick might just continue to make upside before the candle close. So you should have allowed this candle to close, confirm the formation of this engulfing or a railway track or railroad track, confirm that formation, let the day closes. As soon as the day close, then the next day you can spot the impulse. Then in 1 hour time frame, spot the impulse, take the fib of the impulse, target 50 to 61.8 minimum. Then if this corrective structure is zigzag, then target 78% retracement. And then at 78% retracement, if it's zigzag or expanding flat, you can take your trade to the upside, okay, to the downside rather. Look at it, putting your stop loss just above, the beginning of that candle that engulf over the other one. Your stop loss just above it, and then your trade to the downside. It's as simple as that, guys. So that's what you should be expecting on DXY. Quickly, now that we know what we are expecting in DXY, all other ones should be easy for us. Let's go to daily time frame on euro dollar. Okay, on euro dollar. Or the best that I think should happen in euro dollar is that if this is a corrective structure in the middle, I expect that this is very sharp. This is very sharp. Let's change this to yellow. Okay. At this stage, I need this yellow to appear here. Maybe running flat or whatever. I want this structure to happen. As soon as this structure happens, then we'll accept that this is a known structure. This is with A here. This is with B here. Okay. And this is with C here. Okay. Either it forms expanding flat, and if it has to form expanding flat, this one will break this top. That's an expanding flat. But if it doesn't break this top and end here, for it to make a downside, it becomes what? It becomes a running flat, like the type that you see in GBP card. Let me just show you GBP card. Can you see? This is the type of structure that I'm referring to. You have this, you have three-wave structure in the middle, you have this. Can you see? It does not get to this top and make a way to the downside. This is what is called a running flat. You can see the same thing. The same thing can appear here on euro dollar. So by next week, we'll expect this euro dollar to push down to break the previous low, form an expanding, form a three-wave structure that is in the middle. Then we expect a sharp move to the upside to either break the previous top, to break this level A, or might not get to that level A, and then make a move to the downside. Okay, so this is what we're expecting in euro dollar. We don't need to go to 4 hours or 1 hour time frame. The reason why I will not need to go to 4 hours or 1 hour time frame now is I'm not looking for entry. So I'm still, looking for structure. That is the mistake many people do make. All right, so that's the mistake they make. When they are looking for structure, they begin to check entry. And as they are checking entry, they try to, get emotionally attached to the trade. When they are not supposed to get in, they get in. So I've learned a lot of lessons in the past, and I don't do that again. I don't want to look at smaller time frame. I have no business with my entry time frame until I see confirmation of structure in the higher time frame. Okay, so that is euro dollar, pound dollar, guys. Pound dollar. Pound dollar at this level has made a terrible move to the downside. And at this point in time, we cannot be looking for buy opportunity, but we do know that in a weekly time frame, we have a beautiful structure playing out. This one is expected to come to the downside, so it has more downside to go. So now that it has more downside to go, even if we see a buy structure right now, it will amount to counter trending. So what I do in this scenario is to identify the previous resistance. This is the previous resistance. Then after that previous resistance, I want to also identify if we are able to get, a supply area. So you can see from this level to this level, it's a big supply area that we can capitalize on. So what I would like to see is pound dollar making a move to the upside, to come to that supply level. All right. If you can make a move to the upside to, get to the supply level, that would be the best for that we want to see. Of course, you see that in that case, we want a 3-wave structure right here in the middle. So if you can have it this way, 3-wave structure here, okay, and then after 3-wave structure here, we like to see this structure playing out this way. All right, this structure playing out this way. Can you see? This is a complete corrective structure, guys. You can see that you have the wave A here. All right, this 3-wave structure. We have the wave B here, and then you have the wave C here. This wave C here can either form expanding flat or it can form a running flat. If it ends here and it does not get to the top of this structure, then it becomes a running flat. Okay, just like you have this, you have one, you have this, you have this, you have a move to the downside. This is what is called a running flat. But if this one should make this move like this, it has become expanding flat, okay? Expanding flat corrective structure. The same thing can repeat itself here, guys. You have these 3 waves in the middle that has broken this beginning of A, and then if this one should come and break the top, that's expanding. If it doesn't get to the top, that's running flat. All right. Another scenario that can play out in pound dollar is you have this move. You can have this A, B, and C, and the market pulls down. Can you see that it's giving us a 3-wave structure again in the middle? That is still the same thing with what we are talking about. So what you need to see now is that as you see this wave A here, you have to see a bounce here, wave B here, before you see a move to the downside. But as I was saying, it is usually very fantastic to see that this move to the upside actually form an expanding structure and take liquidity from this supply zone. You can see that you have big supply zone right here. Okay, this is what we want to see. All right, this is what we want to see. And then from here, you have a move to the downside. All right, so when you get to this level, what do you need to see before you know that the pair is ready for the downside? You need to see an engulfing candlestick pattern. All right, on a daily time frame, you need to see something like this. You need to, let me show you. Okay, let me show you. You need to see something like this, guys. Let me show you. You need to see something like this. Correct. See something like that. See it right here, guys. Right here, right here. Once you see it right here, all you need to do is to go back to 1 hour. That candle that engulf must create an impulse, find retracement to 50 to 61.8, and take your trade in 1 hour time frame to the downside. You can see this system affords you to take capitalize on a lower time frame for your entry, and then you capitalize on higher time frame for your bigger target. Okay, if you trade with this system, you'll be risking like 30-40 pips, and you'll be getting like 300 pips. That is a high risk to reward ratio trading system. USD JPY. All right, USD JPY monthly look bullish, but it's getting close, to end of structure, but then still bullish. Weekly, still bullish. Can you see? It's still bullish, but we need a correction. A market cannot just keep going forever. No, at a point, it must correct before it keep, before the continuation move to the upside. Then in 4 hours time frame, you can see it's beginning to weaken down. Okay, the bullish nature to the upside is weakening down. It's weakening down right now. It's weakening down. Okay, and it's very simple. You can see it from the divergence. You have a higher high here. Okay, this is a high, this is a higher high, but right here on the indicator, you have a higher low. Okay, that's the first sign that it's the move to the upside is weakening. Can you see? Lower high, higher high, lower high. That is why in the coming session, I'm looking for opportunity to sell USD JPY. Okay, and then how do I approach the market? What do I need to see for me to sell USD JPY? What I need to see is here already, guys. Boom. Can you see? This is what I need to see. It has appeared there. So since I have seen it this way, what do we need to do? 1 hour time frame. Okay, recognize the fine impulse on 1 hour time frame. You already see the move. Okay, you already see the move right here, guys. So all I need to do is to take a fib of this move to the downside. Okay, take a move, then identify corrective structure back to 50 to 61.8. Whatever the structure it will take, I don't want to know. All I know is that as you get to this level, as you pull upside, okay, if I can pull upside, then the next move is downside. Boom, to the downside. Okay, that's it for USD JPY. USD JPY, make a corrective structure. It may not be as deep as I'm anticipating, but all I know is that there should be a corrective structure here. Okay, you can see it's developing the B structure. You have another push-up. As soon as we get another push-up here, don't hesitate. Take your trade to the downside. That's USD JPY. USD CAD weekly. Okay, this weekly, it's right at the top of weekly structure. Right at the top of weekly structure. Even though this market is bullish, but it's showing some element of weakness, on daily time frame. I'm seeing that you might see a correction down to about 50 to 61.8 of this leg. All right, you might see a correction. Okay, so and correction to this level. Okay, so why do I say might see some correction? Because I've seen a candlestick here that reflects a selling pressure to the downside. And as soon as this one comes, we have to go back to 1 hour time frame to see whether it has, you can recognize an impulse there and a retracement back to 50 to 61.8, which is this is the impulse that we have recognized. This one, guys, is the impulse right here. Okay, so let's take a fib of that impulse to the downside, and then what's the corrective structure that is being formed? That's a zigzag corrective structure. Okay, 1, 2, 3 running flat, and another one. Can you see? This is a complete corrective structure that is ending at what? 78% retracement. And I think I give this trade to my general channel, okay, my free channel, because this is 78% retracement ending here, guys. Apart from that, you have this big supply zone right here. So I took the trade from inside this circle to the downside. I just had to close as market was closing. But then when we resume trading, I would like to see a just small correction here and then push down to the downside. Okay, that's what you should be expecting from USD card. AUD, USD. Okay, in the monthly time frame, we still need to push down on this pair. Still need to push down. Why do we need to push down? You will see that this is a corrective structure. In the middle, you have this push down. You need this equal leg here before you can resume any upside. But then that is weekly time frame. On the daily time frame, you see that the daily time frame, you see the first move to the downside. I would love to see this move happening. I would love to see this move happening. 1, 2, 3, push down, push up, and down again. I would like to see this move happening here. I will explain why I need to see this happening. I'm going to explain to you right here real quick, guys. You see, this move is very sharp. This move to the upside is very sharp. You see, this move to the downside is also very sharp. So every sharp move, guys, is A structure or C structure. So if you have a big A here, if that's the case, if we agree that a sharp move is A, we have a big A here, and this one is a sharp move too, and we have a small A. Then what is happening here is a corrective structure, 1, 2, and 3. So this is a small a, B here, and then you need a push down to form C. And after that, this is A, B, and C that has become B. Then this A that goes up, that is A, 3 waves down, B, and then you have C. Okay, that's a simple way of constructing the expected wave formation, and then you have a push to the downside, because right now, if corrective structure is in the middle here, okay, if corrective structure is in the middle here, this push to the downside is massive. Can you see 1, 2, and 3? Then you should expect the same 1, 2, and 3 over here. That's what we are doing. 1, 2, and 3 to the downside. This is what we are expecting, guys. So in the immediate, what should we expect? All right, what should we expect? What we expect is simple. Let the market break down. If you want to buy, you can look for buy opportunity to the upside to get to this top before you continue to the downside. Okay, the same thing is applicable to NZD, NZD USD. All right, we want this corrective structure to come up, okay, come to this level, then break down to the downside. Just be expectant. Then you have USD CHF. USD CHF, you need some correction here. You know, you have correction here, push down like this, and possibly make a way to the upside. Okay, that is USD CHF. Or alternatively, because CHF2 is very strong now, it can stay here for quite some times, consolidate before it push to the upside. Okay, gold. All right, I've been saying it that you can see the markup that is here on gold. We expect gold to come to 1900 or 1920. Okay, that's the ideal level to look for sell opportunity to the downside on gold. But where it is now, I pity a lot of guys who saw gold selling and they were selling. I was just smiling because these guys don't understand structure. Okay, there is no way gold can keep selling down from here. No way, it won't happen. Okay, this structure must complete. Okay, a push to the upside, that is with A, with B, with C. And then at this level, guys, that's a good supply area where we expect gold to make a move to the downside. Personally, I'm forecasting between 1900 to 1920 for gold to make a move to the downside. And the move is going to be very terrible. It's going to be very fast and sharp. Okay, it's going to be very sharp and fast. Euro GBP, guys. Okay, Euro GBP, we have seen at this top of structure. You see it here. I've said it repeatedly that this is a structure. This is a structure. Okay, this is a flat, expanded flat corrective structure. You need this to keep pushing to the downside. It has to keep pushing to the downside. Of course, you see that we had three-wave structure here, and you have correction in the middle, then you're expecting another three-wave structure right here. That's on the daily time frame. And apart from that, guys, we have seen a candlestick pattern that really matters to us right here. I want to show you. Can you see? We have, after this terrible buy, we have another sell pressure right here. Can you see? Sell pressure right there. Okay. So if you see this sell setup right there, you just need to step down to 1 hour time frame, guys. Step down to 1 hour time frame. You see a lot of structure here. You see three waves here, three waves down. Then you have a straight impulse to catch liquidity at 78. Let me do it again so that you understand what I'm doing. We want to see corrective structure. So first thing is to see an impulse, and which we have seen. Then the correction is here. All right, this 78, exactly at 78. And of course, I forecasted that this pair is going to fall down at 0.8680. I forecasted it in Wednesday live when market was still around this level. Around this level, guys. Market was still around this level. I said this pair is going to turn at 0.8680. What did I do? Because I have recognized something very, very important. What did I recognize? I've recognized that this is a three-wave structure, and this is another three-wave structure. And then what we are looking for is whether a single wave structure or a double wave structure, we have to come this way to 78% retracement. And when I take the fib of this impulsive move to the downside, 78% retracement falls exactly at this level. That was the reason why I forecasted that we're going to have it, this pair, we're going to have it turned down at exactly 0.8680. And exactly at that level, guys, what happened? The market turned down. So what is our expectation when market resume next week? Our expectation is simple. Allow this move to form a corrective structure, and then you take a move, take another push to the downside. Wait for corrective structure to appear. Let it continue to come to the downside. And minimally, I expect it to come to this area, this level, guys. Minimally, it should come to 84. 84 is my target for the sell of Euro GBP. And I was very happy and grateful that some of my guys in the group were able to catch it right at the top. In fact, some of them even have had a better entry than I do. Okay, Euro CHF, allow this corrective structure to happen. Let the market come to this supply area, and then you have another push to the downside. Okay, Euro card. All right, Euro card, same thing. All right, so let it correct, push down again. Everything must correct. It must correct before you push them down to the downside. Okay, this one too is correcting. You have a daily. There's actually no trade setup here, but we want it to push down. Okay, you can push down. If euro strengthen, can take a buy. Otherwise, it continue to correct and push down, correct and push down. All right. So euro or, I gave this setup, and I've given you a scenario of what you should be expecting. This pair was right here when I told everybody who cared to listen that this market is going to 55. It's going to test 55. Right now, it's on 52.90. It has gotten to 53 before, but I'm very sure it's going to get to 55 because this level must be taken. That's very, very important. This level must be taken. So by the time it's taken, we'll come to 55. Okay. And then when it comes to 55, what is the nature of the corrective structure that is forming? Okay. What's the nature of the corrective structure that is forming here? I'm going to show you real quick, guys. Okay. Do you notice that right here, you have three-wave structure to the upside, three-wave structure to the downside, and then you are expecting 1, 2, 3, 4, and 5. This is not a WXY structure, guys. It is ABC structure. Okay, that is A, this is B, this is C. And then by the time this C completes 5 wave, it must have come to 1.5500. Okay, 1.5500. When it comes to 1.5500, all you need to see is this candlestick here. Once you see this candlestick pattern here, what you do next is to step down to 1 hour time frame, recognize your impulse for your corrective structure, take your trade to the downside. Okay, so you have it so interesting like that. There's already a divergence here. In 4 hours time frame, there's divergence, you see. So, but what I'm thinking is that this pair might just have a push down this way, a push up one more time, and then on its way to the downside, because of course it's just waiting for its colleague. All right, it's waiting for its colleague to make a move. Otherwise, it's due for a move, to the downside, because already we had a three-wave structure here with C extended, A, B, and C. This is accepted as an expanded flat. You should have this moved to the downside, but it corrected here, push up. So all I have to wait for in this pair is to see a massive push down, corrective structure, and then continue to push down to the downside. Is that okay now? GBP card. Okay. The GBP card, of course, we're looking for buy opportunity at this level, but it never came. All right, because oil was strengthening. No, for that reason, we couldn't get that set up. But I still expect that this strong push to the upside will have to still come at a time. Must have this, all right, before we have a push down to the downside. Okay, this strong move must be reflected here. It must happen here before you have a move to the downside, because the reason why I'm thinking so is that this strong move here it's an impulse, guys. You must have an equivalent strong push here to complete a structure before you have a move to the downside. That is GBP card. GBP CHF, we'll try as much as we can to catch a buy opportunity on GBP CHF, but you never give anyone. Okay, never give anyone a chance. All we are looking for is corrective structure to this level and we'll push down. Okay, corrective structure to that level and we'll push down. The same thing is applicable here. We still want this to push to the upside before we push down. All right, it has to push to the upside before we push down. Okay, what else again? This one will have to push to the upside. Why pushing to the upside, guys? If you look at this, it's a corrective structure. Okay, you have an impulse, corrective structure, you have another impulse. 1, 1, 2, 3. Then you push up. Okay, by the time you does this three-wave structure to the upside, the length of the wave here must have been equal to this one. Can you see? Must have been equal to this one. And then you have three-wave structure in the middle. Then from here, it's already in supply area. The premium price, the price here is better. You have a wave to the downside. Is that okay now? So that's how I see this market right here on the daily time frame. What I want you to do is to wait for this pair Do not trade at the start or at the opening of the market. You have to see what this pair is doing. If it goes up to break this top, find anywhere here, this will have formed a three-wave structure. Then you take it to the downside to break this low here. Okay, if you don't see it that way, if you want to keep pushing down, it means that it can be pushing down like this, and this will form a structure here to push up again. Okay, so you have to watch in the first 2 or 3 sessions for you to be able to understand the alternative that this pair will follow. AUD, JPY, same thing is applicable. If you have corrective structure here, you have a push down here, you must have a push up. So this will be 1, 2, 3, 1, 2, 3. Then you have 1, 2, and 3. This will form a structure that will take you to the upside. Okay, you will know all these things when you see the structure that is being constructed in the middle. Okay, that's how you will know. You will see that this is strong push. This is strong push. This three-wave structure. So if this strong push and you are forming a messy structure here, okay, it then means that you have this. So that this one will make A, B, C in the middle. Okay, these three waves that comes down must have another three waves here. Okay, let these three waves here be yellow. Then these three waves here be yellow too. Let's see. Let this be yellow. Yes. So can you see it's balanced now? So this is big A, big B, and big C. Then you have a push to the upside. Do you understand? So that's how to construct. That's how to construct it. The same thing is applicable to this. Same thing is applicable up, downside, upside. That's how to approach this. Okay. Same thing is applicable. All the JPY pairs, they have the same structure. Okay. So let me just show you NZD, NZD, AUD, NZD. Okay. AUD, NZD. I'm expecting a correction. All right. You have a move, you have this, you can have a push, you have correction, you have a push. The reason is that on a weekly time frame or monthly time frame, you see that this pair is right at the top. It's right at the top of the range. Okay, so either it needs a reversal or a massive pullback. So that is it, guys. I've done a rundown of all the pairs as I see them. By next week, by the grace of God, I'm still going to do, a trade setup for you guys. Okay, so I'm done now. I don't know. Is there any of you that have a question? Is there any of you that have a question? Do you have a question? Do you have a question, please? Okay, so in the absence of no question, guys, so I'm signing off. See you next time. Bye-bye.
All right, bye, sir.